It is hard to believe that we are already in 2025. It only seems like yesterday where everyone was petrified of the new year 2000, when we all expected the end of the world due to technology crash, with power failures, transport systems shutting down, and the banks closing their doors. And now, 25 years later, we continue strong, with technology being one of the most exciting and beneficial investment options available to investors. But this new year is also a time of reflection, and with this in mind, I would like to thank every person that watched my videos or read my articles. I would like to thank everyone whom I had the pleasure to meet, had a personal discussion, exchange emails, and especially those who have become our clients. And this is exactly why I love my profession. Not only I have the privilege to help people with their financial affairs, to make their life easier, simpler and more profitable, hopefully, with less stress, but also be able to build closer relationships in the process. 2024 was a very positive year for About Retirement TV channel, and this is what happened. We introduced 24 new videos. The channel had over 1 million views. Videos received 24,700 likes. Videos were shared 15,300 times, and the most watched video was 9 ways to hide money from Centrelink legally. That video alone was watched 28,700 hours. It just goes to show how much this type of information is needed in Australia. My name is Katherine Isbrandt from About Retirement. I'm a certified financial planner, and you are watching About Retirement TV, the place where you can find most of the information that you might need when preparing for your retirement, or if you would like to improve your retirement financially, if you're already there. As today's video is the first one for 2025, I really would like to start the year on a positive note, but also with information, with sharing and with remembering, understanding and applying to your investment strategy. So I would like to share with you the best investment and life tips that come from some of the best known investment minds. Number 1, don't save what is left after spendings. Spend what is left after savings. Warren Buffett. It is a known fact that we tend to go about our life first, cover our living expenses, all our bills and additional lifestyle costs, and only save what is left over, which often is very little. To be successful, however, financially, you have to reverse this trend. Make a decision of how much to save first, and then make your living with the remaining funds. This is just about the only way to get ahead. I wish I knew that simple strategy when I was 20. Number 2, you need to know yourself. Shane Oliver of AMP Capital. If I had a penny for every time a client said to me, I understand the market and I know it can be volatile. This is what I hear when markets have been positive and going up year after year. But only at the smallest market drop and volatility, those people are some of the first ones that panic and run for cover, selling their investments at the worst possible time, only to experience the worst possible returns. When investing, you really need to know your psychological weakness and be honest with yourself. If this is you, the best advice I can give you is to look for a solid financial and investment advice and work with a financial planner. During your reviews, you will gain more knowledge and understanding of markets' behavior, types of investments to consider, reasons for investment choices, which in turn will provide a degree of certainty and clarity for your investment strategy and future outcomes, not to make those rash and emotional decisions. Number 3, invest in what you know. Peter Lynch of Magellan. If you are intending to make any investments, the best idea is to invest into companies you know, trust, and use on a daily basis. The companies that are in great demand for their products or services. Stay away from recommendations of 100% returns in a week or in a month. Those would be investments of a very high risk with a great probability of full capital loss. So unless you are prepared to accept those losses, stay with companies that you know well, understand their offering, and are able to gather all necessary information so you can make informed decisions when to buy and how long to hold such investments. Number 4, it is not whether you are right or wrong, but how much money you make when you are right and how much money you lose when you're wrong. George Soros, a hedge fund tycoon. Most people, when investing, want to see positive return on every single investment picked or recommended. This is not going to happen, so be realistic with your expectations. The whole point of investing is to create a diversified portfolio in which some investment will win, others might lose. But as George says, as long as you are right more than wrong, you will make money and most likely lots of it. Also, if you picked an investment that has not performed, analyze the reasons, and if expectation is for no improvement anytime soon, admit your mistake, sell it down, and move on to another winner. Number 5, an investment in knowledge pays the best interest. Benjamin Franklin. When it comes to investing, you have 2 choices. Educate yourself to be able to perform the necessary research and analysis before you start investing your money. Or, if this is not your interest, pay somebody else to do this for you. Number 6, in investing, what is comfortable is rarely profitable. Robert Arnott, American businessman and investor. This quote is true not just in investing but in business as well, or any venture where you wish to create a great outcome and strong dividends. There is no other way by getting out of your comfort zone and accept some degree of risk. Profit is simply your reward for risk taking. Therefore, if you do not want to take any risk, you will not be rewarded with profits. Obviously, any risk can be minimized and controlled, but this is where your due diligence, research, knowledge, and hard work are essential. And the last quote, which is vital to be understood unless you don't care for returns or profits. Number 7, the biggest risk of them all is not taking one at all. Melody Hobson, CEO of Ariel Investments. This quote relates to my previous statement. There is a direct trade-off between risk and return. If you as an investor only stick to low-risk assets like cash, money market or bonds, then you run a risk of a very low long-term returns, in which case your money may not even be able to keep up with inflation. This means that with time, the value of your savings will be decreasing its purchasing power. Simply said, if you keep your savings in cash for a very long time, you will not be able to buy the same item that you can buy today with those savings in the future. Therefore, it is obvious that some degree of financial risk needs to be taken when investing for a long term. On this note, I hope you will all have a fantastic investment year ahead, and I would like to wish every one of you a very profitable 2025. If you enjoyed today's video, please click the like button and subscribe to our channel. This is the best way to support us. If you would like to learn more about investing, especially for your retirement or during your retirement, please visit our website aboutretirement.com.au, where you can find over 200 articles, videos and other resources, all to do with your retirement planning. If you would like to organize a meeting with a financial planner from About Retirement, please click the button Book a Meeting and choose the time and day of your preference. This is when we can discuss your personal situation and how we can improve your financial outcomes. And now please watch our recommended videos, Selling Your Home in Retirement, presented by Sean, a must view if you are planning to sell your home. And the second recommendation is our debate video, Account-Based Pensions or Annuity, which one is for you? Amazing discussion between myself and Sean to better understand those retirement income streams. Watch and learn, and we will speak with you in our next video. Bye for now.